Hello everyone, today is June the 1st of 2021. Incidentally, my dad's birthday. Happy birthday, Dad. Turning 62 today. So we wanted to talk a little bit about inflation and what that means, how it's affecting us, and how it might be a little bit more insidious than that number that the Fed likes to trot out every now and then. Specifically like how expensive things go up over the years. Stuff you wouldn't normally notice.
Well, you get into these cycles sometimes, like we did in the 70s, and there can be seemingly no end to it. And of course, that's what the Federal Reserve is worried about.
Right, like with all the money out there, and obviously like some of these supply chain issues that they're having, and wages being raised, which is a good thing in a lot of cases at these various vendors, but it does have downstream effects. So if Amazon's paying their workers $20 an hour, how could that affect the average consumer? And that's kind of that hidden cost of inflation we're talking about. If they decide to kick that cost down to you, for paying their worker a little bit more money.
Well, labor inflation is probably has the most impact on the larger inflation number that we see out there, and like you say, there's nothing wrong with somebody wanting and getting a raise, but the impact will be felt across the board. Sunday, I went out to breakfast with my wife, as we do on Sunday, and when I got the check, the bill, it was $40 for breakfast, and I had a bagel.
You had a bagel? Wow.
Well, it was a bagel and lox and all that, so it was a little more than just a bagel, but $40, that caught my attention.
Yeah, $20 a person. And maybe it's the era in which you really begin noticing prices of what's sticking in your head, but I tend to think of $20 a plate as being, dinner prices.
Dinner
or
prices.
Close to it.
Exactly right. Not breakfast bagels, but it's happening. Inflation is beginning to impact us, and we get a lot of the headline news involves labor costs.
Mm-hmm. The price of tuition, like schooling costs, also big inflationary.
Oh, absolutely. But I went to McDonald's here last week, and they offered me a job with a little flyer in my bag for a job for $12 an hour. And I had to think about that. Well, not too long and not too hard. But the fact of the matter is, my first job, I worked in the steel mill back in the 50s, and I made $3 an hour. And I made more money than anybody I knew of. Literally anybody that I knew. And here now people are getting $12 an hour, so that's 4 times.
How much? What year was that you were getting paid $3 an hour?
1959.
So I started working.
Nobody remembers back that far.
I started working for minimum wage in 1997. So it's a big difference, and I was paid $5.25 an hour. So only $2 more than you were paid in 1959. So that seems like a really large period of time, but
without much inflation and
wage inflation.
Wage inflation, and what we've seen, of course, with the impact of China, kept the inflation down quite a bit for quite a period of time, and that's probably coming to an end. The effect of that.
Yeah, well, and to speak to that, China is they are attempting to transition to be more like the United States, or a more consumer-based economy with a rising middle class. Obviously you have to pay people in the middle class a better wage. So
Right.
China will eventually experience some kind of wage inflation as well, and they'll probably kick the can to India, and then so on and so forth as the nations continue to develop. But this kind of ties into our general segment on risk and how it applies to the market. Inflation is something that the market is very aware of. In fact, if you've seen a lot of the moves lately, it was really kind of pushed by some real inflation fears that it might go out of control and that the Fed wouldn't be able to control it. So we just wanted to kind of touch base, give a couple real world examples, and kind of just speak about it a little bit. Anything else you'd like to say, Dennis?
Well, just that the fear isn't so much labor wages, it's what the Fed does to halt inflation.
Like rising interest rates.
Yep, the market always reacts to what the Fed does, and if the Fed raises rates, this market could stumble.
And what do they call that? The taper tantrum, I think it is.
Taper time. I guess I hadn't heard of that, but yeah, yes, they're afraid of the taper.
Well, remember, this is Money Matters, but most importantly, you matter, and I hope you all have a great day.